Morning, family. It's KJ here during London session, and I just wanted to talk to you guys about how to use the KJ Cash Sniper Scope. Super excited with this new indicator I created, and let's get into it. So first, let's talk about how to add this to your charts. And you will need a link. I repeat, you will need a link. The link is in this bio. Send it to any trader that you love. If somebody sent you this, they love you, and they want you to be profitable. So once you get the link, then make sure you click the star that says add it to your favorites. And every time you go to indicators and you type in KJ Cash, you will see the sniper scope. Close this. And when you want to add it to, just add it to your favorites, okay? KJ Cash Sniper Scope. And this is what you'll get. Now let's get into it and let's look at it. And let's talk about what we're actually looking for, what this is showing us. Now the KJ Cash Sniper Scope shows us, excuse me, oversold versus overbought conditions. Oversold versus overbought conditions. When the markets are overbought, we're looking for sells. When markets are oversold, we're looking for buys. Okay. And that's pretty much it. We'll keep it simple. And then look at how to actually read the indicator to see what's oversold and what's overbought. Now, the first thing first is I'm going to mute some of these lines, and then we'll look at them all together so that we can really see what's happening, because it can be a little bit overwhelming looking at it all by itself on the very first time, and I totally understand that. So let's just take it back a step, and let's look at these lines here first. Now, what we have here is a 10, 20, 30, 70, 80, 90. And I want you to recognize these lines first. Now our 30 and our 70 is going to be for our RSI, and your RSI is purple. Okay, so this line here is going to be your RSI. And for your RSI, we're going to look at the break and the re-break of the 70 up here. See how that didn't touch? We'll just go to one that did. The break and re-break here. Even the 80, when it's the 80 in the RSI, this is extremely, extremely, extreme. But the 70 and the 30 is mostly what you're going to see out of the RSI. Now, when it comes to the stochastics, for an example, are yellow, what you'll look for, and I'll take the RSI back off. What you'll look for is the shift of our K and D lines while over our 80 or 90. So when this yellow line, which you can consider your K line, is over the green or red, I mean, well, when it's over, it should always be green. You're looking for buys. So when you see this shift, you want to look for buys. When you see it shift down, you want to look for sells. But my whole thing is look for the buys for reversals when you're down near the 80, the 20 and the 10. And this is where you want to look for continuations. Now, yellow, our yellow stochastic, let me zoom out. As you see, follows price very closely. Our yellow is following price very close. This price goes down, it's going down. When it's here, you can see it clearly is ready to buy, and it does that very close. And so we call this our immediate sniper, and that's what we look at when we are either scalping or looking to see what price is doing immediately. And again, we got it here, came on down for us to push up. Now I add that with my RSI, and let's look at the red one. Let's look at the red one by itself first. Now, red is going to be a little bit more long-term than yellow. I'm going to add yellow as well, so you can see them both together. But red will be a little more long-term, not as immediate. It'll spend a little bit more time down. So they were both here. Markets hadn't pushed up yet, but once red finally did its crossover, you see we finally got that push up. Yellow had already crossed over. Yellow had already crossed down. Once red finally gave us that cross, let's look into it so you can really see what I'm talking about. Let's move these lines, right? Let's get in there. We got the yellow line crossing first, it turns red, then the red line crossing. Now both of ours are red. We're looking for sell opportunities. Now, I don't take these two by themselves either, honestly. What I like to add in is the orange. Now, our orange is way more long term, and I'll show you that by itself so you can see how it barely moves. And this is important because I look for everything together. Now, our orange is more like a swing. When you see the orange up here, you know, okay, this is a big deal, and we're looking at probably a big drop. Now, even though it came down here, you see it push back up, they gave us the continuation right here. Now look at the top end of it. Here was the first boom. We got what? From, I can see on the right-hand side, we got from 45.21 down to about 44.17, so a little bit over 100 points. Another push up, and then another drop from down here for way more than 100 points. Way more than 100 points. That second drop was 44.65 down to 42.06. So about, what's that, 265.06, almost 265.06, 259 points, something like that. Crazy, off of just our orange. But what I don't like is stop outs, stop hunts, not knowing when to buy, when to sell. So I use them all in conjunction. And I added one more. Now, if you remember our BYOB, the 1466 is one of my favorite stochastics, and that is even more long-term than our orange. And so I added the 1466 in, and I made the K line white, and our D line is going to be a little bit darker shade blue or a darker shade red or maroon if you want. Now, we have our long terms, we have our short terms, and we have our RSI. What I look for, and I had to explain every line first before we could get to the nitty gritty, is everything to line up like it does here, zoom out, like it does here. And I don't get so technical with it. I'm like, okay, guys, everything's lined up. We're looking for sales. Everything's lined up. Not necessarily the RSI. Again, we want it under this. Here we go. Everything's lined up, guys. We're looking for buys. So let's just put a line right here. All right. It's starting to get good. So what's happening? Let's see what this is looking like in the marketplace. Right here, just based off of our stoke, we got to push up from 44.30 to 45.10, which is almost 45.30, which is 190. Okay, that's not bad. And of course, that's not the biggest move, but it is a move. And that move did not get stopped out. And that was only by saying, all right, our sniper scope is telling us the markets are oversold and we're looking for a buy. Now, do I use this by itself? Absolutely not. I do not only look at this in the chart and say, okay, what am I going to do? I at least draw a fib or use my pivots because pivots are a moving fib. So let's look at how to use this really quick with pivots. I already showed you guys how to use pivots in a previous video. We want the pivotal zones. And we're going to go over that. Is this going to be money in our pocket? We can leave it like this for now. Now, this is going to be good. What I like to do personally, and I'm going to go to this swing moment, right? What I like to do is wait for price to get to our key levels and then look at your sniper scope. And that's one of the number one ways that you're going to use this or be able to be profitable as you're using this, because you're not going to just do it every time or any time you see oversold or overbought. We're going to look for it when we're at our key levels. For an example, this tap of the R8. We know our R8 of the pivots is where we're looking for a reversal. We see we already had everything busting over, everything here. So this was our first indication of a sell-off for the KJ Cash Sniper Scope. Well, actually, when we broke and closed above the R6 and we're headed towards the R8, we're like, okay, anywhere between the R8 And the +3, we're looking for our nice sells, but our KJ Cash Sniper Scope is already extremely overbought, and we got some major push-ups. So we're looking for a nice little drop. So we get rejection of the R8. We get our KJ Cash Sniper Scope breakthrough. We get our nice retest. Right here, what we have is divergence. We got a higher high on our sniper scope, then a lower high on our sniper scope. See that? So you see how all of our stochastics and our RSI is up near the 90 on this right here. Price drops a little, then price pushes up higher to the R8, from the R7 to the R8, but our sniper scope does not push higher. This right here is bearish divergence, and what you look for right there is that sell-off. And what we got was a sell-off. Boom, price came, tapped it for that one last stop out. We finally got our sniper scope in alignment. And I want you guys to see how it just started pointing down right after this candle. Now on this candle, one can argue, and I personally, looking at my yellow and my red, in the moment here, I'm looking for this sell. I'm like, yep, I know exactly what this is. These are about to point down and everything's gonna start raining. Now look, right after this next candle, you get this. Now, if you did not take it on this candle, which is okay, because just like we said in the pivots video, we want to sell on bearish candles, buy on bullish candles. So the bearish candle through the R8, you got red, red. Now our long-term sniper scopes are still green and blue, which still represents, buying. But we know that our immediates is telling us sell. We know we're at the R8, and we know once this yellow crosses, once this white line crosses this blue line, that turns red. We know once the orange line crosses this green line, it turns red. And we know our RSI is pointing down. These are like little hooks pointing down. We're coming from the R8. We are looking at a swing to the P4 or at least the S0. And let's just look at how this plays out really quick. We got price come down. Now remember, and this is another key thing to note, I do not like to initiate trades once we are down in this area. Once our sniper scope is trading in between, our RSI is in between, that's why these are yellow, the 45 and the 55. I chill on the trades that I'm taking until I see extreme overbought or oversold conditions, just to protect my capital. There are other ways, but I just would not rely on the KJ Cash Sniper Scope while we're in this area. Now what we see is another pull up. We got our prices getting ready to hook down. That's a sell opportunity again. Now keep in mind, it did not break this level. Our pivots are shifting, but we are already in here. Watch it just drop, guys. It comes back, tearing through. Now the pivot's shifting. That's a whole nother conversation that we had during the pivots video. But we remember this is the R8, and we remember the P4 was down here. And we're still waiting on that TP to smack. I'm going to show you guys a video. And this is what it takes. Now let's talk about why we aren't buying right now. Why didn't I buy right here? Right? Because this was the trade. Because this R8, the shift of the pivot levels, that didn't sell me on it. I was R8 to P4 from way up here. Our pivot levels shifted because price was consolidated. But we already had what we knew was happening, for one. And for two, we want to do higher time frames, which is what I'm going to get into very next. But first, I just want you guys to see this hit. We're going to go into multiple time frame confluence, and then we'll get it out of here for the sniper scope training. Right? Boom. Now this is now considered our S0 because of the consolidation. But we know for the bigger move, this was just a P4. And that first TP hit, second TP, final TP would have been the 43.75, which we could keep waiting for. But I want to show you guys how to have even more confidence when pulling the trigger. And what I do for that is go to a higher time frame and make sure that everything is in alignment. So if we should have started on a higher time frame just to be clear, but it's okay. We go to the daily first. What we'll see is we were at an actual daily level at the R6. So when I see price, and that's this candle here, pull up to the daily level. And let me see if I could just make this a little bit more opacity so we can see that green candle as well, because I knew that was lit there hiding. When we see price pull up to a daily level, like these two are daily pivots, that's when we want to break it down. So we're like, all right, we're at the R6. It's not the R8, but it's the R6. Is price going to reverse? Let's go into a smaller time frame. We go to our 4 hour. Wow, this was the R8. This was the R6 on the daily, but it's the R8 on the 4 hour. Yes, we probably are in. Remember, this is where we was at. No, we don't want to stop. We just want to skip a little bit further back. This is what we was looking at. Just like, where are we? Price is at the R8. Okay, let's go down to the 1 hour. Price is at the R8. Okay, let's go down to the 30-minute. Price is at the R8. So you guys see how this is, you guys see how this is going? Every single time frame we're looking at. Now we're at the P4 on the 15. Okay, so these smaller time frames, you see that. P4 on the 5. P4 on the 1, but on the daily, R6, on the 4 hour, R8, on the 1 hour, R8. And I trade this thing on the 1 hour all the time. So that's the multi-time frame confluence. We have our stochastics up here pointing. Soon as we get that point down, we got that breaking close below the R8. We know we have a TP here at the P4. We're going to get the pivot level shifting. Now keep in mind, pivot level to pivot level is always the safest trade. We already talked about that, pivot level to pivot level. We know that. Take that every single time. Use that in Confluence. Get used to that. Do it in your demo and let your confidence build up. Once that confidence starts to build, you'll be able to hold through these shifts easy, even knowing that, I know in my head this was at one point at the P4 and it was even just the R6 at one point. And there's a way to make sure that your pivots even show you the previous levels. I'm just gonna show you that here. Boom. That's how I like to do that. And so when price is shifting, I can see everything that it was before. So that's that. We got divergence. We got our RSI. We have our Stokes. We're looking for extreme overbought, oversold conditions. Now, I don't just use these indicators by themselves either. Based off of this, what I'm seeing, how prices, and I'm just looking at SPX right here, right now. Now we got our yellow and our red above, looking like they're overbought, but our RSI isn't there yet, and neither are our long terms. We are at the S2. So what I would like to see, look at the 4 hour as well, is price push back up to this R. Oh, I'm looking at Bitcoin. Dang. What I would like to see is price push all the way up to this P4 area before it comes back down. See how we got, well, not quite there yet on our long terms. We want that price to push back up to a more key pivotal zone, maybe P4, maybe S3, go down to a smaller time frame and catch that drop. Again, multi-time confluence, multi-time frame confluence, you go to the larger time frames, then you break it down to the smaller and catch your trade. Just to go over a slight quick review, guys, before we hop off, we're looking for everything to be either overbought or oversold. We're looking for it to be at a key level as it was here. Let's just go back because these are the trades we would like to catch. We want everything at a key level. We want it overbought and oversold. We want it to look like it's raining. Then we pull the trigger. We keep it simple. Next video I do, guys, I'm going to explain how to not only use the sniper scope, but what we added was the KJ Cash EMAs. You don't have to use the KJ Cash EMAs. They are a build off of DeLorean. And I already explained DeLorean in a past YouTube video. Here's your DeLorean EMAs. We want to use these in confluence with the sniper scope, understanding that our TPs are going to be our EMAs as well as our pivot levels combined. But like I said, the next video, guys, check it out. I'm just going to give you a little preview. The KJ Cash EMAs is not just the DeLorean, but we have some extras. We got a money pocket where we look for extra trades. And we have some extra EMAs, which uses multiple time frame confluence, okay? But we're going to use all of these in conjunction to find the absolute best opportunities. And we're going to beat these markets. Now, remember, guys, no indicator, no strategy can help you be profitable unless you have discipline. Discipline is the only way you're going to win. The amount of discipline you have is going to equal or equate to the amount of success you have. And there is no way around that. Proper risk is the only way to beat these markets. And I'm saying that because if you over leverage, then they'll take you out of the game no matter what. So I'm going to end the video with discipline and proper risk because that's the only way to win. This is your KJ Cash Sniper Scope. Use it responsibly, and let's get this money.